Hey dividend investors, today I'm going to talk to you about the untold secret about trading volume. This is something that a lot of people don't really pay attention to, and I just want to really bring it to light and how you can use it in your own trading strategy. So first off, we're going to be looking at the Bank of Nova Scotia versus Sundial, the weed stock, which is kind of an odd combination, but I'm going to get to that in a bit. So basically, the Bank of Nova Scotia just recently, the other day on Thursday, it was a long weekend, so that's why they closed on Thursday, but it was actually quite interesting. So let's get down, let's check this out. So the Bank of Nova Scotia had a great trading day. It was up 0.5%, which was fantastic, but look at that trading volume. Almost 14 million shares traded versus an average volume of about 4.3 million shares. This is actually huge. This is telling us that there is a lot of big money getting traded into this stock, and it was up 0.5%. Usually, there's two different outcomes. There can be, if there's huge volume, the stock will usually not trade sideways. It will either go up or down. If there is huge volume and it goes up, that personally means to me, and of course a lot of traders, that there is momentum as well as people thinking, or big companies, big ETFs, big funds, somebody with big money has the idea that this stock is going to go up into the future. Now, the PE ratio is not cheap by any means, and of course, I've got a video either releasing soon or already released about this idea of PE ratio making stocks cheap. But we can see that there was big money at the end of the day that went into this stock rise. We can see that there was big money that made it drop in the morning off of a good open, and then there was a mediocre rise with still large volume for a Canadian bank, but not massive volume. And then it traded sideways for the rest of the day with average volume. And then, near the end of the day, it started climbing with average volume, and then at the end of the day, it went huge and then stagnated with large volume. What does that tell us? Well, that tells us that this stock is being thought of by big investors to go higher into the future. Let me show you Sundial now. Sundial's average trade volume right now is 500 million shares per day. However, their trading volume the other day was only 116 million, and it was down 3 cents. If we start looking at that 3-month chart when it went stupidly crazy, it had huge volume behind it. When this huge volume, as we can see here, trading kind of on average, there was a little bit of an uptrend here with semi-high volume versus what happened before. Then there was average volume, and then there was huge volume again. Huge volume made it rise to crazy stupid levels. It's only showing $3 here, but it was actually as high as around around $9 for a very short period of time in one day. And then it sank once again with average volume. Below average volume trades sideways. What does this tell us? Any kind of higher than average volume shoots the stock price up. That is personally telling me that it's not a stock where if there's going to be huge volume that it could tank it. Because what this is telling me is anytime that there's a news story or anytime that there's big volume, these two stocks are currently going up. So we can actually trade on this volume. We can find a low volume day where the stock either slightly dips or trade sideways and slowly make our way into that stock. I never say go all in because, of course, especially with a company like Sundial, where it was literally like 30 cents a few months ago, and now it's trading at over $1. What we can use this to our advantage is now that the trading volume has come down from crazy levels, we can start initiating a position. And then what we can do is to watch the trade volume. As soon as it starts getting 4 or 5 times the normal average volume, that is when you want to start selling a little bit of your stock, because of course you want to trade on volume with some of these stocks. Now with a company like Scotiabank, Bank of Nova Scotia, or a solid blue chip stock, you would want to buy when the stock is down a bit and having average volume, because at that point that's a good time to invest, because you know that there's not going to be any crazy swings anytime soon. Meanwhile, with a stock like Sundial, which is not a blue chip stock, which is a speculative stock, what you would do there is to buy it with low volume, and when the stock isn't going crazy up and down swings, and then once that volume returns, which for a weed stock will be when the United States legalizes weed, which will be probably over the next few months, that is when that stock is going to explode again with crazy volume. And what's going to happen is it's going to shoot up like crazy. And that's when you start cutting back on your exposure to that stock. Every time it doubles, you sell half. That way, you make your money back. Let's say you had 1,000 shares at $1.10. Let's say it goes to $2.20. You sell half, you get your money back, and you still now have 500 shares still left in the market that are essentially free. Now, when it goes to $4.40, you sell half again. And now you keep on making money, still having exposure, and the stock is now free. And you can do this all the way up to whatever you want. Now, myself, I've already done that multiple times with Sundial, and I think you could do this as well as long as you play it smart and you're not using you're not using mortgage money, you're not using food money. Use the money that you don't need. You could essentially go down to zero. I call it as casino money. If you've got a little bit of casino money left over because there's no casinos open, you could run this strategy with a stock like Sundial and then maybe make some money. But always kind of do your own research. Never trust a crazy person on the internet like myself. Always do your own research. And of course, I hope that you've enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.